All right, traders, I'm officially back and I decided moving forward, I'm going to be doing what I do best, which is short selling these small cap stocks, guys. So I am going to be growing a small account and I'm going to be majorly focused on simply just short selling these small cap stocks that correlate with the unique gap strategies that I've created. So within this video, I wanted to simply explain to you some strategies that you could use today within the market to short sell these small cap stocks. So for those of you who don't know, you can short sell these smaller cap stocks. You need a broker who allows you to get the shares to short. So in terms of the broker, Trade Zero for small accounts. For larger accounts, I would recommend Cobra Trading. So yeah, let's get right into it, guys. MYMD. This was a phenomenal trading opportunity today in terms of short selling. So what I like to do is I like to find stocks that gap up, so I'm looking for a stock that opens up a lot higher than it previously closed. And I find these stocks by using, the gappers, the top gainers, scanners within the pre-market. So I'm usually looking at around 8:30 a.m. And then once I find that list of stocks, I'm focused on the ones that are up the most. Ideally, it has to be up at least 20%. So for example, MYMD, this had a massive gap up, massive spike here in the pre-market. As you could see, the previous closing price, which is this white line, was at $4.47. And it ended up opening a lot higher than it had previously closed. So once I find these stocks, the first thing I'll do is I'll check throughout the chart history to see how they normally close, right? And to see how they normally react. So I like to look for the ones that are closing weak at the lows. For example, MYMD, you could see it had this little gap up, had this nice little morning spike the previous day, and ended up closing weak at the lows. And as you could see, the same exact pattern literally happened today, right? It had a nice little morning spike and the high of day was basically at the same time, and then it closed weak at the lows. So what you can say is history repeated itself. So what I'm doing is I'm putting myself in trades where they're based on history repeating itself, right? So in terms of the history for this stock, the short-term trend was stock gaps up, has a nice little morning spike, tops out early in the morning, at around 9:36 a.m., and then it closes weak at the lows. And as you can see, the same exact thing happened, right? So that's the trend, that's kind of the pattern. Now, in terms of the entry is fairly simple. So as you can see, there's a lot of resistance levels. You have 1390, you have 1052. So here's what we know. We know that if history repeats itself, the high of day is going to be very, very early in the morning, which it was as history repeated itself, right? So that can give you a sense of where to enter in terms of, timing. Now, in terms of entry, this is the key entry right here. So what I wanted to point out is you could see this is a key support level right here. There's a key support level at, we're going to call it $7.81. That is the low of this candle. Why is this such an important support level? Because as you can see, the stock was breaking out. It was pushing for new highs, got to a high of 1390. Then it got absolutely crushed. It went from 1390 all the way down to 781, right? Now, what I want to point out is this is where it bounced. And you can see it bounced from 781 all the way to a high of $10.50. And by the way, pay attention to these dojis, guys. When you see these dojis form at major resistance levels, the stocks, they tend to get crushed. It's a key trend reversal confirmation. This is a gravestone doji. If you see that form at a major resistance level, it is a great opportunity to be short selling the stock. It's a very rare candlestick, but once it comes around, it's a great opportunity to short at a key resistance level. So the point I'm trying to make is the stock finally bounces, and let me show you what signs of weakness are. Signs of weakness is it's forming lower highs. You can see right here, it's forming lower highs at $10.51. It's failing to go back to the highs, which is extremely bearish. So when a stock is forming lower highs and it fails to go back to the previous high, what it's going to do is it's going to go to the support and it's going to try to crack the support. And as you can see, it cracked that 780 level. Now you're probably wondering, well, once 780 cracks, how low can this go? Well, look at this. You really have no support up until right here in the low fives. This is just a massive spike. So in terms of a consolidation level, your consolidation level would be right around there in the low fives, right? And as you could see, surely enough, the stock quickly crashed and it went all the way down to $5.60. Now, history told us there was a potential morning spike, and then we got that morning spike. As you can see right here, you never want to short into these, into the front side of the move. You never want to short into these strong green candles. You want to wait for some of the backside. You want to wait for that pop of resistance. Don't try to catch the top. Wait for the resistance confirmation. And as you can see right here, that red line represents that key support level. So I typically use a 1 to 5 minute chart. And as you can see right here, this is your key support level, and it has turned into a resistance level in the pre-market. And then it ended up going all the way down to the low fives, right? So if this were to push all the way back up to that key support level, and then it started topping out, it started forming resistance, started forming these bearish confirmations, it is going to be a phenomenal opportunity to short sell, because you can get in the mid to low sevens, and you can get out in terms of price targets right here in the mid fives, 560s. And then if that cracks, you can try to make another $1 profit per share for the gap to fill right here at $4.47. So guys, it was fairly enough a simple short in terms of confirmations, in terms of, well, okay, when do I want to short? Once you see this bearish confirmation right here at 780, so just look at how it reacts. The stock got to a high of 789 to touch that key support level, right? That key support level, meaning if it doesn't turn into support, there's so much downside potential to go to the mid fives, right? It's a key level to short a pop into once you see this bearish confirmation. So the stock right here, the 1 minute candle closed very, very weak at the lows. And then you have another bearish confirmation right here. And then you have another bearish confirmation here. So in terms of entry, you'd want to get your average in the low to mid sevens. And in terms of when you enter, as soon as you see this bearish candlestick form at that key resistance level, you can take a starter there. And then once you see more confirmation right here, you can add into these lower highs, into this weakness, right? And then another thing to keep note of is when you see a stock get halted, right? So see how it gets halted right here? When stocks push up and they get halted, they tend to have a nice little spike, and then they tend to fill this intraday gap waiting to fill below. As you can see, it quickly had a spike, and then it filled this gap below. And then you can see once it gets halted on the downside, they tend to keep on going down. You know, they might have a small little pushback to fill this gap, but if you see that resistance formed, it's going to keep on going down. So yeah, that's what you want to keep aware of. Pay attention to those intraday halts. And guys, MYMD, that was a fairly simple trade. It's just watching the support and resistance, watching the key levels, watching the key gappers. I mean, you could just see, like, once this level right here gets taken out, this 581, once this gets taken out, there's really no support up until right here, which is going to be 470 to 520, right? And it's known for closing weak, so you can kind of hold it out, kind of ride it out. But yeah, in terms of taking profits, you want to take profits into the fade. So take some off towards the 580, and then if you keep on holding, take some off, another 50 cents to $1 profit per share. So yeah, that was MYMD. The next one is going to be EYES. This is what we call a classic gap close reversal. So I'm going to disable extended hours so you can visually see this on the chart here. As you can see, there's a gap that is waiting to fill at $7.48. So this was initially trading all the way at $8.16 recently, and it crashed all the way to $6.77. That's eyes, right? So huge downside potential when it hits this key gap fill level. As you can see, it didn't quite fill the gap today, but it had confirmations to short, which is fair enough if you can get in close enough to that gap fill level. So the stock pushed up, it closed the gap almost, and then it had a reversal. That's what we call a gap close reversal. So in terms of, shorting this stock, you can just visually see huge downside potential at that key level. And in terms of entry, let's go over it. So once you see that bearish confirmation, like I said, once again, here's your bearish confirmation right here. It's all within the candlesticks. And then you have lower highs right here, lower highs right here. History is going to repeat itself, and it's going to start to go back down where it came from, which is going to be in the 720s. So you would look to get in right here at around 780s, and you would look to cover towards key support, which is going to be towards 720 to 740s. And it did end up going all the way down to 710. So guys, that was EYES, that was eyes. OCG, this is another, same exact pattern as eyes. As you can see right here, and what I want to go over, this is that key support level. So think of that key support level we talked about with MYMD. Now we're going to go over the same one with OCG. So let's see right here. All right, we're going to go to a 10-day chart, and we're going to go to 5-minute. All right, so check this out, guys. This is the pattern, right? So it recently had a nice morning spike, and then you could see it double topped right here. So it had the nice little morning spike, and then it double topped. Now look at the high of day. Pay attention to these short-term trends. The high of day was right here at 10:40 a.m. and the stock double topped. So quick morning spike, falls back down, and then it double tops at 10:40 a.m. Now check this out. Quick morning spike, starts to get crushed, and then here's the double top. Look at the timing, 10:30 a.m. When you see these similarities within history repeating itself, that is when you want to short, guys. And also pay attention to the key support levels. So this is a key support level right here at $6.20. The stock went from 620 all the way to 720. Now notice once 620 cracks, the stock is continuing to fade and it goes all the way down to 477. That key support level at 620 is now a key resistance level. So when you see that morning pop towards those previous support levels, using this 5-day chart, and then you see that confirmation, you have the double top, you have the bearish confirmations, you're going to want to short. So in terms of using that pattern of history repeating itself, and we just go back to the daily chart, like guys, this pattern, look at it's the same exact candle. This candle is the same candle as today, guys. It's literally the same trend. Just look at the comparison. So we know the timing is around 10:40 a.m. and we know to look for that morning spike with the double top. So in terms of confirmation that it's going to be a double top, and in terms of timing, it's literally right here. This is your double top. This is your bearish trend reversal candlestick confirmation. And then you could add more into this fall right here. So your average can be right around 575, right around there. And your price target is going to be right towards the lows, towards $5, right around $5. So guys, you're going to be entering plays that have huge profit margins with not much risk, because you're getting in towards the top, you're setting your stop loss at or slightly above the top, and then your price target is going to be towards the lows in this particular situation. Now this is going to be another one. So again, this is going to be a key support level strategy. This one is slightly different. So let's go over this one here. Let's see. I'm going to go to the 1 minute chart. Okay, in this one we're going to enable the pre-market. All right, so guys, PETZ. So here's what I want to point out. We have key support and key resistance. Your key resistance is going to be right here towards the 350s, and your key support is going to be right here towards this previous closing price. So this particular strategy would simply be to short sell the previous closing price once it turns into resistance. So first we have to identify a weakness within the chart. So let's kind of check out PETZ. Let's go over the chart history real quick. It's typically not a multi-day runner once it has these big green days. And in terms of this big green day, it was pretty much weakness, because you could see right here, yeah, it pushed for some new highs, fairly off, not a lot of volume in the after hours to pre-market. But you can just see that once it cracks this key support level, this previous closing price, and turns it into resistance, it's going to be a great confirmation to short. So once you see these top wicks, once you see these confirmations to short, you're going to want to get in right around, I would say, here towards these lower highs at 260s. So you see the confirmation forming at 270, and then you see these lower highs at 260s with these, gravestone dojis, and then surely enough, the stock fades and it closes weak towards the lows. Obviously, you want to cover into those lows because it can pop right back up, and then you look to reshort. Literally right here, doji, reshort, right? If your broker allows you to short during extended hours. So yeah, guys, that was fairly simple enough. So those are the 4 stocks that are correlated with the strategies. The best plays in terms of shorting today were definitely MYMD and OCG. Those were by far the most predictable. So in terms of that history repeating itself, definitely OCG and MYMD. So basically what I'm doing is I'm looking to put myself in situations where the odds are in my favor, and I'm looking to short those pops. I'm not catching the top. I'm simply waiting for it to hit that key resistance level. I'm waiting for the key confirmations, such as the candlesticks, the volume stuff I look for. And then I'm looking to short and then cover towards those key price targets. So guys, I hope this was beneficial for you. And let me know what you think. Start testing out these strategies. Start looking at, start gaining awareness on where the overall trend is heading for the day. These small cap stocks, they might have a nice little quick morning pop in the morning. But in terms of the overall direction, it tends to be that downside move where the vast majority of the profit is, if you're looking to intraday trade these. So yeah, let me know what you think. If you enjoyed the video, smash the like button, and I'll see you guys in the next one.